Okay, let's get going. Close that. All right. Hey guys, my name is Evan Shunk, and thank you for having me, Chris. Let's get in a little bit to my trading journey. I'm born and raised in West LA. I have a West Coast trading hours over here. I'm up every day at 5 o'clock. Unlike the East Coast guys, I get to wake up nice and late. Actually, I prefer West Coast trading because you get the whole day ahead of you once you're finally complete. But my trading journey started in April of 2018. I had just graduated college about 8 months prior. After graduating, I was stuck in the mindset of, well, now what? I'm sure a lot of people feel that way. I wasn't really sure what path I wanted to take, but I did know one thing. I wanted to work with the stock market. The stock market is, I've always loved the stock market. In college, I would always try to buy this, buy that, but I knew nothing about it. I just knew I was always interested. I would try to buy stocks while I was in college. I was studying anthropology at the time. That was my major. So I do things like, buy before earnings and just hope it was a good one. I'm sure plenty of us are guilty of doing that one before. Also just the hold and hope strategy, just buying something and hoping it's going up. Just, no really good basis for how to go about being profitable in this game. So after college, I thought, well, what do I need to do? I thought about getting my MBA, taking prep courses, educating myself in business and finance. I thought it would increase my chances of getting a job where the stock market was involved, and increase my abilities in the stock market. I know so many people think that you need to know how to dissect a company's earnings report or business structure, learn about business structure to really find success in stocks. But I'm sure it could help, but this is far from the truth. You don't need to have a background in finance whatsoever to find success in this game. So overall, I decided I stopped the MBA prep course. I was like, no, this isn't for me. I tried doing a Series 66. If you don't know what that is, it's a test to become an investment advisor representative. Wanted to try that, get an entry-level position somewhere. I actually ended up failing it twice, the Series 66. The second time was only by one question. I almost had it, but I'm really glad that I actually ended up failing. My path could have been really different if I, simply passed that one question. So once I got home from failing that test, I walk in my house, and this is kind of where Timothy Sykes comes along, because I see Tim Sykes on my television. He was on one of Steve Harvey's episodes. One of Steve Harvey. He's given a live interview by Steve Harvey. And immediately I was intrigued. He was talking about stocks on the show, and I read in day trading, and so I researched him more. And the way he talked about stocks and trading was really making sense to me. It made logical sense. He would talk about psychology of stocks and the way how there are predictable patterns in the market to take advantage of. So that really resonated with me, that type of talk. Part of me always knew that the stock market was kind of like a game, but I didn't know the rules. So that's something I needed to learn. But I knew it was something that I could be successful at. I have a gaming background. Used to be a big gamer. I'm sure we got a lot of who isn't likes to play some video games, but I was obsessed with gaming. And it had a huge history in it. I would just thought that if I focused as much on trading as I did, focus as much as I did on video games as I did with trading, then I can find some success. The amount of energy I put on video games, I just got to transfer all that to the stock market. And I knew I could get good at it. I always had a knack for finding patterns in video games. I'm sure you're probably aware how pattern-oriented video games can be. I was actually a very competitive gamer. I said that. I wasn't on a professional team or anything, but my skill level was definitely at a pro level at that time. In 2011, I was actually invited by Activision to the very first Call of Duty XP tournament. I actually believe it was the first $1 million live esport tournament in the US. They found me through my high ranks on worldwide leaderboards in multiple different game types in Black Ops 1. So I had an act for that type of stuff. So let's go back to the Sykes chat room. So after research on Sykes chat room, I just thought I'm going to go for this. I'm going to give it my all. I'm going to stop Series 66. I'm going to stop this. I'm going to dive right in. And when you go into trading, guys, I'm sure you've already experienced it. It's got like there's some sort of people are skeptical. You know, my parents were skeptical. My mom was just she was not having it at first. She was very skeptical. My dad was like, okay, let's see what you can do. I had friends that would, you know, sometimes make fun of me a little bit for going down this route. You get some hate. People are just so unaware of, they think it's just gambling, right? You're just gambling your money, and it's just not something realistic. But I was going to give it my all. I ignored all the hate. You got to do it. And I went ahead and made an investment in my trading education and signed up for the Tim Sykes Challenge chat room. From then on, I did not look back. I engaged in every DVD, endless webinars, learned from a variety of different traders in the chat room. I learned a lot from Sykes. He really helped with the basics of technical analysis, just the trading language, what is really going on in this game. But it was Tim Grittani, the trading style in that chat room that I resonated the most with. And Stephen Dux as well. Grittani was a moderator in the chat room at the time and was very active. Dux was actually still present in that chat room. If you didn't know, Dux was born in the Tim Challenge chat room as well. Although it was just before he decided to go off and do his own trading community, create his own chat room, do all his own stuff. So he was only in there for a short amount of time. But Tim Grittani is where I learned how to track data from trading tickers as one of his DVDs. And Dux was the reason why I zoned in on specifically gappers. We'll talk about that. But I learned tracking data through Tim Grittani and how to go about an Excel sheet somewhat. Well, my brother helped me with that. But anyways, I concentrated on gappers, or let's get to the next slide. Let's see. So yeah, I decided to concentrate on gappers because there was such a statistical edge with them. And I noticed that the profit potentials, if you really honed in on this strategy, the profit potential was huge if you can really master it. And then knowing that I had data for patterns, I had entries, ideal exits, allowed me to, remain a bit emotionless as I was doing it. Data allowed me to be unlikely to be shaken out of crazy manipulated moves and whatnot. But I knew that having a calculated edge is something that I needed in trading. I needed to see it on paper. I needed to know my stats, my statistics. So data tracking was essential to my style and what resonated with me. Do the next slide. And that's when my trading style started to come out. I became a quantitative trader, which is basically an approach that relies on a mathematical and statistical model to identify and execute on opportunities. And so what I would do is collect data, focusing on gappers. You have to track every single variable. That means you're looking at what's the market cap, what is the float, what's the institutional ownership, what's the short percentage float on that stock, what is the resistance, how much resistance, what is the price data, as in open to high, how far are these things spiking out of the open, how far do they push, how much do they just collapse and close below the open. And so you have to track every single variable to know which variables are relevant and which ones you can kind of just toss aside, not really relevant. So it eventually comes out to you start to create a system. based off statistical edges and statistical probabilities of what the stock wants to do on that day, based on the specific criteria and variable going on that stock gapping up on the day. And that's exactly what I did. So I had a defining moment because I wasn't always a system trader. I would start with all these other strategies that I would learn from Sykes or Roland Wolf and all these traders out there, Nathan McCod from Investors Underground. And I would try to really hone in on price action. Price action is really tough. It's just the riggers, the market manipulators in this game, the people really controlling these moves, they really know how to take advantage of your emotions and get you to exit out of a trade emotionally or start to panic. And price action is a really tough art form in and of itself. You really got to have a good feel of what's going on at the exact time of these moves. So anyways, I eventually I showed my brother my system. Was actually a really defining moment for me. I used to concentrate on price action. I was profitable doing price action, but not to an extreme degree. I was finding success in it. However, that's because I had built my system, I built my data, but I wasn't truly using it like a system yet. I wasn't applying my system. I was still trading the price action. And it wasn't until I showed my brother my system did I actually start to do it, because I would teach him everything I knew. I taught him all the price action, but he was a lot of trouble with price action. Again, it takes years to master price action. And he was tired of it. And when I showed him my system, he was like, dude, why don't I just do this? And I was like, you could. I mean, I don't see why not. I just haven't done it yet because I've been profitable in price action. I just haven't felt the need to do it. And then Chris goes, no, I'm going to use this system. And I was like, all right, you should do it. I think it's going to work. And he's actually the first one to apply my system. And immediately, as soon as I saw him do my system, there was this one ticker, I forgot what it was called, but he made like $6,000 more than me on the day on one ticker on just like 1,000 shares. And immediately I was like, wow, okay, I'm going to the system. I'm gonna go and do this. I just haven't applied it yet. And so I was gonna trade the system and also trade price action. So I could do both. So his outperformance on that day really convinced me to change my style a bit and act on the data that I've been collecting. And it's funny because my brother is actually the first profitable trader that I know from day one. And that's simply because he decided to apply the system that I built. That's the thing about system trading. If you have a profitable system, you can be a complete beginner. You don't even have to really understand much of what's going on in the market, as long as you know how to follow the rules. If you know how to just learn the system, you can ignore everything else. Concentrate on the statistics and the data. And exactly, who said that? Steen. Steen is a really good example of that. I don't know how intensive her market knowledge is, but for this system, you don't have to have a good knowledge. I mean, just like my brother, you can be a complete noob, not be able to do price action, and just boom, you got a profitable system. You know how to follow the rules. The sky's the limit. And so let's go to system trading, which is funny. That's why I always like to say for the system, ignorance is bliss. And I say that because it's almost as if the system works so well, not totally true, but the less you know, the least likely that you need to worry about things going on in the market. The more you know, you might try to tweak it and say, oh, this is happening, and make more decisions based off emotional factors, I guess you could will. But if you don't know anything and you're just following these rules, you're just happy. I mean, you're gonna have a profitable strategy. You're just gonna be a happy guy. It's very easy to transfer over the rules, follow rules, you profit. You just got to stay disciplined. And now let's get into the KVS room. When I found it, how it has helped me, and the value that you guys are receiving, and what I received as well in this room. I found the KVS room. Where is this? Let's get into it. Just about 2.5 months ago, I joined the KVS room, Chris Verma's chat room. I've known about him on Twitter for some time, but had yet to really check him out. What caught my interest was his charts shorting parabolic moves, and the charts he would post on his Twitter account. And I failed to really find a way to attack parabolic setups with any sort of size. I would scout moves here and there every now and then, but was never really comfortable enough to really profit much on these plays and to really size in and to use really data and statistics to really hone in on these parabolic moves. And so I decided to join Verma's room. And when I joined and started watching some of his webinars, I couldn't believe it, guys, what I had come across. It blew my mind. I mean, at first I was like, these are my plays. I said to myself, I've been tracking day one gappers, day two plays, an overnight short setup on day one gappers since 2019. I had no data on para, I said that. So I learned all my para plays from him. So I could not believe that I was in a room where someone was teaching to attack these plays and in a basically identical fashion. And I mean, the entries were the same. Exits were incredibly similar. Some were different, some were same. Only real difference was some of the criteria we would use for our setups. And as I continued with his webinars, what it really looked like is that Chris just really reminded me of just a more advanced future, trading version of myself. He was more advanced than I was. He had styles we had our styles that were basically identical, but right away I knew I needed to absorb what he knew. Anything I lacked in this trading style, I wanted to improve on. And Verma, he was more advanced, so I needed to learn from him. So things I learned from Verma were like the formulas he used. I learned extra formulas, and I mean, I'm sure you guys have seen his Excel sheet. That it's unreal. His data spreadsheet. He's a data machine. I mean, look, I have a good data set, but he just made his data set made my data set look a little silly. But you don't need a complex data set like his. Whatever works for you works for you. So yeah, and learned the pairs from him, and I do all that. What was it? So that's how his room really helped me. Oh, and his size up technique. I did not have a good sizing up technique. That was very flawed. If I knew about the size up technique that he was using, I think I could have made a lot more money throughout the past couple years. So that was a big plus for me, because now I know how to size up appropriately using the Kelly system, or a similar version of the Kelly system. And so that was a lot of value that I learned in the KVS room. So, and I also want to mention, I mean, I don't know if you guys, let's get into my old setup, how valuable, I mean, I feel that this room is that you're in. I mean, it took me years to build this system. So much long nights, just my eyes just drying out from staring at a computer so long. And then it's funny because when I first found his room, I was actually upset at first. I mean, I couldn't believe he was giving all this out for $200 a month. Something that took me long nights and so much time to really hone in on. And he was just handing it away. But I couldn't believe it. But hey, good for you guys. I mean, the routes, what is it? All the tools that you have now, the chat rooms and some of the really legit chat rooms, such as the KVS room. Hey, you can really make it in this game if you really give it your all. I mean, the resources are out there. You're in a room where it's here. You just gotta give it everything. I mean, there's one thing of just following the system, but you gotta learn the system. You gotta track your own data. You have to see it on paper. Otherwise, it's gonna be hard to really convince your brain of what you're doing. So let's get into this. So this is my old setup. I mean, look, when I started, I would actually track this on paper. Uh, Everything was done on paper. I know. I told Chris this, and she couldn't believe it. I think he started laughing at me. In 2019, you could see all the papers right here. What is it right there? You see how I tally it up. I would write every ticker and do everything one by one with the calculator. The open to the high, how much resistance, tally it up and find statistical edges this way. I know, I'm crazy. Thank goodness my brother forced me to switch to Excel once he saw my system that I built. So yeah, and now that all this work, I mean, is done, is just in the KVS room, and he's just teaching it to you right away. I mean, the value there, guys, is you can't. I mean, I'm shocked how much hate this room gets on Twitter. It blows my mind. It's just a bunch of people they have no idea what they're talking about. Anyways, so this is my old setup. This is what I did. I use Cobra and Trade Zero. I use Thinkorswim from Fidelity for my platforms. I use scans for my scanner. And then I was just a paper pencil calculator early in my career. I changed it up. And my current setup is this. I use Cobra, Centerpoint, Speed Trader, and Trade Zero. I use all 4 brokers. It's important for the system to have the most access to short locates that you can get. Every time you miss a system trade, that is an opportunity cost. You don't know what market environments are going to benefit your system more than others. And you don't know when those market environments are going to come back. So you can't really miss a system trade. It can incredibly affect your P&L on the week or on the month. So it's really important to have access to all these shorts. And for small accounts, you need, for small accounts, I highly recommend Speed Trader and Trade Zero. A lot of people are using Trade Zero. It works. I really recommend going to Speed Trader. They recently just started allowing small accounts of, you need $2,500 to open an account at Speed Trader using Apex Pro is the one you want. It's far superior than Trade Zero. You will have access to so many, they're just as good as Cobra, in my opinion, when it comes to locates. I mean, yeah, they're just as good as Cobra, except Cobra allows you to do restricted shares. I'm getting the brokers, but I'm going to give a broker review on my YouTube soon. I'll dive deep into that. If you have a big account, go with Cobra, absolutely, and Centerpoint. I would use those two. Small accounts, you got to switch over to Speed Trader. They are far better than Trade Zero with locates, but I would get both of them so you can have 6 trades in a week instead of only 3. As you know, small accounts can only have 3 trades per week. And now I use Trade Ideas. I use Flash SEC. I use Thinkorswim. That's all the current setups and everything that I'm using. And what else do I got written down here? Trade driven. All right, let's get to the next slide. Broker review, yeah, I talked about that. Small accounts, Speed Trader, Trade Zero. Big accounts, Cobra and Centerpoint. Trading recaps. So in the future, I do want to, you know, I'll be giving out trading recaps. I do want to help struggling traders. It's something I enjoy doing. You know, the further on I'm getting in my career, the more I'm starting to, you know, slowly push towards, you know, the education route to help people. It's so much more. I love to teach and help people find success in this game. I mean, this is what I love to do. And I know how much bogus, fluffy information videos you can fall into out there. There's so many traps of just sketchy chat rooms, and you really got to watch out for that. I'm not going to drop any names, but I'm sure some of you might already know just some chat rooms are just not good. And you guys are in a good one right now in the KVS room. Truthfully, you're in such a valuable chat room teaching you such good stuff. There's some really good, valuable chat rooms out there. KBS is one of them, 100%. So yeah, I want to continue to help struggling traders, and I give tips, strategy, advice on my Twitter and my YouTube. It's something I want to continue to doing. Something I love to do, and eventually, I just want to travel the world. I've been traveling a lot this year. The perks that trading can give you if you're truly dedicated are mind blowing. You'll never have to deal with that 9 to 5 job. You always have you master the market and the skill of trading. You'll forever have a way of profiting in the market. I mean, the market, these patterns that we have discovered, they're all just products of human nature. Human nature is never going to change. These patterns are always going to be there. And if you can start to figure out how to really master these patterns and scale trading, you'll never really have to worry about, income again. Once you get to that disciplined skill level, and you can just trade from anywhere you want. I mean, it's the dream job, in my opinion. It's like I get to play a game the rest of my life. It's incredible. So, I'm gonna go travel the world, just be where I want, internet, laptop, you're good to go. And there's another reason why I pursued it, and that's the future that I'm doing. And there it is. That's my webinar, guys. Hope you enjoyed. And if you got any questions, I'm here to answer all of your questions. If you guys need, answer in the KBS room. Also answer some in the Zoom room, but I'm going to start with the KBS room. If you guys got any questions for me, I'm happy to answer everything. Speed Trader, what's anything here? All right, first question is, Speed Trader has pattern day PT battered day trading rule. Yeah, if you're under 25K, you have to have you're under the pattern day trading rule, right? If you're under 25K, yes. Yeah, when I started, I really honed in on the gap up short. When I saw Ducks, I bought one of Ducks's DVDs, and he really pushed me towards the gap up short. I really feel the gapper is one of the toughest patterns out there. You really need data and stats out there, I think, to really hone in on that. You got to have a system behind these gappers, because they're just such wild movers. I mean, I'm sure you guys have seen them, the moves these things can do. I mean, how do you not get chopped out on some of these if you don't have statistics to really keep you calm on these moves, knowing that it's going to work out in the end? So hone in on one pattern, choose what pattern you want that to be. I think the gapper pattern is one of the best, one of the toughest, but one of the most profitable patterns out there, 100%. Yeah. Scalping by improving reaction time, quick decision making. Yeah, gaming could help with scalping. Yeah, coding would help. Yeah, with KBS, my profits have increased because I have learned. So I got a question in the chat room. I've seen compounding growth in my account since KBS. And yes, I have actually, one of my best weeks was this week. I made over, I think, $117,000 this week. And a lot of it was thanks to the sizing up method that Chris Verma uses. He uses the Kelly system. If you want to learn about the Kelly system, Verma teaches it well. Go check him out. Basically, I'm able to use more size incrementally as I compound profits. So yes, my size up has increased, and if my size up has increased, yes, my profits have compounded more and increased. Expenses to build a long-term investment portfolio versus keeping money in your bankroll. How do you manage wiring out for? So I got a question. How do you manage wiring out for expenses or to build a long-term investment portfolio? Oh, how I wire out? I don't know. Just whenever I need to pay the bills and my checking account goes low, I'll go and throw in another 15 to 20K in my checking account. That's pretty much how I do that. I mean, and I actually don't have a long-term investment portfolio. That's something I lack. I used to do that in college, but ever since I got into day trading, I kind of just stopped my long-term investments. Don't really do it that much anymore. Keeping more, and yes, it's important to keep more versus keeping money in your bankroll. I see. Yeah. Oh, okay. Yeah. Okay. That gives me a good point. How do you manage wiring out expenses or to build long-term investments versus keeping more money in your bankroll? Because if you size out some of your money from your account, your size will decrease. But that is a good thing. Once you start to really compound profits in this game using the system, I find it to be incredibly helpful to, necessary to take profits away. Once you've compounded so much growth, reserve that profit, guys. That money is real. You don't always have to just be smashing in such huge Kelly amounts every single time, 50, 40% Kelly. Yeah, if you continue with the system, your profits may continue to increase, but you have to take into account the volatility that you'll deal with sometimes. And that can be really mentally exhausting. And we're only human. So you got to choose the amount that's really comfortable for you. And when you really start to compound profits, then, make a decision to maybe slow it down a little bit, reserve some of that, go to a 20% Kelly, 25% Kelly, whatever you want, but something, reserve those profits when you start to really size up. I think that's important. You don't want to be dealing with, you get to like a 500K account and then you take a 40% Kelly loss on that. I'm losing 200K. I'm not doing that. I'll slow down the Kelly as I start to really accumulate profits. And here's a question. How has the system helps you dealing with losses? The losses, look, there's downtrends. There's always going to be a downtrend. Even if you don't even have to trade a system, there's always going to be months in trading, however your style is, where you're going to have a bad week, have a bad month. It's going to be a time period where your account will draw down. And there's just no way around it. Losing is part of the game. You got to become a really good loser in this game. That's part of trading. You got to become the best loser. And when I take losses, you just got to realize that if it's a planned loss, if it's a planned part of your system loss, that is a good loss every single time. And you have to tell yourself that. Any system loss is a correct loss. And you can't let it get to you. You have to understand that right now, if these losses are coming, this is just part of the natural progression of the system. Market environment will change. And when market environment will change, it's that you're on right now the market environment is more resistant to your edge right now. That's normal. But what always ends up happening is that the market environment will change back to being incredibly the best environment for your system. So drawdowns are always met with extreme parabolic growth. A great example of that was actually gappers earlier in the year. Were not very successful. Oh man, I was just hitting losses all the time. But I had years of data on this. So I knew if I stuck through this rough period, it will come back. I trusted my data. And that is exactly what happened. Once I think July hit or something, July was the most incredible year for gappers on the year, was July. This July was unreal for gappers, and I knew it would come back. So if I let that system get to me, those losses in that downtrend period, if I let it hurt me, if I let it get to my head and I quit and I stopped, I would have missed out on the most parabolic growth of the year for the gappers. And so you got to just be okay with your losses if they are planned to your system, and don't let it stop you. You don't know when that market is coming back. It's going to give you that parabolic growth. Let's see, next question. My system criteria is different from Chris there's multiple ways. I'm not going to jump into all the criteria, but there's just some small differences on, like, for example, market cap or the float or the risk percentage on the day, stuff like that. There's not too much. There's some different, or his red flag criteria compared to my red flag criteria. You know, some similarities, some differences. You know, things like that. Do you make any modifications to your system during changing market conditions? Should you make any changes to your system? Yeah, I mean, you just let the data guide you. If you start seeing that this risk is working better than the other risk, that's great. And if you think, oh yeah, that reminds me of, that's also why this room is also just so useful, because not only are me and my brother are always in the office working on our data and our edge and refining it, but now we basically get to use Chris. He is now our third component, a fresh set of eyes to all this data and edges going on with the system right now. So now if we miss something, he might have caught it. And now I can pick some of his ideas and infiltrate that into my system. So just wanted to throw that out there. It's how useful that is. But changing my system during market conditions, yes. I've noticed that when the market gets really hot, for example, we just experienced that on DWAC, and we just get some crazy runners, and it unleashes all the sector momentum and sympathy in the market, and things just erupt. I think, what was it, Monday, guys? There was like 8 different gappers on the day, all gapping up over like 40, 50%. I mean, that was wild. I woke up that day, I was like, oh man, I was borrowing shares like a madman. And so when that crazy runner unleashes that market explosion, I tend to notice that it's always the first day that I get wrecked. I don't know why. Maybe it's just because it's so new, and I know, you know, hot sector sympathy plays can be outlier moves. I've seen that in my data as well. Watch out for hot sector sympathy, but they are still profitable. So don't not play them. I think it's just the very first day that it unleashes is the cautious day. I will treat that as a red flag day, and size down appropriately. And you find that, just even how I found this, just through experience, just having a better feel for the market from the years of trading, and just seeing my data that so many times that after the first day are the days that I get wrecked after that market explosion. So that's how I make modifications to my trading system, allowing data to guide me when I start seeing that maybe this specific criteria doesn't work anymore. Throw that out. It's not really that useful. Either that is you know, certain red flag criteria or things like that. I actually used to have a lot more red flags in 2019. I got rid of a bunch of my red flags in 2020. They just weren't that relevant. And data is what showed me that. So you always got to keep up to date with your data forever, because it's always going to guide you, and you have to adapt and change it and refine it as the market basically changes as well. So you got to do that. Would pricing of locates affect your trading system? No, rarely, very rarely. If it's a high price stock, I'm paying 50 cents, no question. No doubt. If it's like an 8, 9, 7, maybe if it's like a $4 stock or under a 5 and it's a 50-cent borrow, I don't care. I'll miss out on that one. Sure. So it just depends on what I think the range is on the stock that day is going to make my decision of how expensive of a borrow I'm willing to locate. Yeah, so always keep that in mind. High price stocks, sometimes you gotta pay, and it's worth it. Low price stocks, if they're expensive, maybe you can avoid it, it's fine. What setup from KVS do you feel more confident to take? That would be the parabolic plays. That is the play that's really, that I didn't have no idea how to attack parabolics, and I learned all parabolics through Chris Firma. I use his trade ideas scanner for parabolic plays, and I'm tracking them now rigorously. You know, I'm going to try to make that pattern my own now. I'm going to see what things I use for variables, what variables I want to use, what red flags I think are important. It's important. You guys got to be self-sufficient. That's what you got to study. You can't Sure, you can follow firm system trades. It will work, no doubt. But to really find success, you got to study it. You got to be self-sufficient. You got to track data. You have to see it on paper. You got to spend the long nights. You got to do all that. But yeah, parabolic plays are what I use the most for this chat room. And what have I been finding success in? Actually, I started what was it, like a 10K parabolic account, and I think I'm already at like $18,000 with that 10K parabolic account I've been using. So it's already up over 80% on my parabolic plays, guys. I always start any new pattern. I do small size. I get to feel for it. I just get used to it, and I learn that way. And I get it on paper. I want to see it. I'm not, this room is not just some alert following system. You got to learn it. Let's see. What's your process for developing setups and refining criteria? Developing setups. I'll use, once you just see something consistently happen in the market over and over as you watch and watch, you take notes and you say, hey, I want to pay attention to that. I'm always tracking data, so I'm always cross-referencing variables in my pattern. Since I have all the variables, I now can see them play out in the pattern, which allows me to know which variables are relevant and which variables are not relevant. It's really important to do that. That's why you have to do this yourself. Otherwise, you're never going to know which variables are important, which ones are not. And process for developing setups and finding criteria. So that's my process. I'm always on the Excel sheet. I'm always cross-referencing. I'll take a criteria, plug that into my spreadsheet, and see what the outcome is using this criteria. Or I'll use a different criteria. And so I'm always analyzing my data. That's how you have to do it. Are you a trader that watches every tick minute by minute? No, I'm not a trader that watches every tick by minute, or at least it's not that relevant for me. I concentrate on a longer term time scale. I want to know where that stock is going to end up in a longer frame of time. If you're just concentrating on these minute by minute plays, you're going to be shaken out so often. I mean, these riggers on these plays are ruthless. They know how you're feeling emotionally if you're concentrating on such a short time frame in the stock. You got to concentrate on larger time frames. Where these things are going to be by the end of the day, the end of the week, what your profits would look like on these patterns by the end of the month, the end of the year. You're taking a macro perspective on the data in which you are using. Oh, I got to charge mine. Oh, that'd be awful if my battery. Jeez, I caught that. I'm plugged in. Charge it up. You got to take a macro perspective on your data. You can't just look at it on a minute by minute tick. You got to use a longer time frame. Do you borrow before shorting or after appearing on TI scans? I mean, I use scans. I think it's a really good scanner. I use a TI for trade ideas for my parabolic stuff. And then do you borrow before shorting? Yeah, I mean, you have to borrow before you short. Or you borrow early. Oh, right. I borrow early morning. So if you're really going to dedicate yourself to system trade, specifically gapper setups, and really want to hone in on the gappers, you have to wake up early. You cannot miss out on borrowing shares. Any miss out on a system trade is an opportunity cost. You cannot afford to do that. So therefore, you have to wake up early to ensure that you get locates for that gapper. I am up in California, 5 a.m., sometimes 6:40 or sometimes 4:40, 4:30 every day. I will not wake up past 5. I will wake up. I need to locate shares. I have to play that gap, any gappers on the day. I will not miss out on them. And if you're taking the system seriously, you have to do that as well. You can't mess around missing borrows on the day. You need those. You got to put your all into this. So system traders, you're waking up early, no question about it. You can't just show up at 6. You might not get locates that day. Let's see. Are you a trader? Do you borrow before? What's it? All cases Sykes is given out here. Do you ever long? I do have, I tried going, do I ever long stocks? Incredibly rarely. And in fact, if you ever see me long a stock, you should just short it. I am not a successful long trader whatsoever. I actually lose every time I try to long a stock, but I am working on it. I've been noticing, I've been trying to gauge on when these gappers tend to reverse. So many times when you have a big gapper set up, they'll like kind of trap shorts. They'll convince shorts that this thing's going to fade, and they'll slowly grind it back up, and then they'll rip their face off. I've been tracking those. I'm trying to use a volume forecast method of when these things that are giving that coil action, and breaking out past high day, maybe past maybe in the afternoon it does that, or maybe after 2 hours after the market open. I'm trying to figure out the best time frame. But when they go out, it can get nasty for shorts, and it might be a good idea to just cut right there. I've been working on that. It's not official yet, but I've been working on it for some time actually. I used to act more on it, but so many times they'll break it past high day, and that's really just the rigger's plan to just unleash all their shares and the shorts covering. So I track data on long, I'm not having fun too much success with it. Do you have one entry, one exit on gappers? Vast majority of the time, yes. Sometimes if I really feel like the stock might take a push out the open, I'll like only get some shares in on it, on the stock. Yes, I have one entry, one exit. I like to get a lot, close to the open. I'll try to get on a push sometimes. If it's a hard fail, I might try to get on a bounce, but more often than not, I have one entry, one exit. And I also trade the price action as well sometimes, but most of my profits come from my system entries and exits. Entry, one exit. Crazy. From the beginning of this year, gappers were crazy, and like you mentioned, from June, July, they started working. Did you completely stop trading the gappers, or what were you doing then? In June and July, before June and July, the gappers were really tough some periods, but I didn't let that drawdown get to me mentally. I fought through it, and I know some of you probably, many people probably stopped gappers at that time. They were nasty. I didn't let it get to me. I also had, my size was appropriate to take drawdowns at that time, and I kept with it. And so when July came, it was just exponential growth in my gapper system. My red flags, I got a lot of red flags. I could talk more into that. I can throw a tip out for red flags right now. And I'd say one is recent IPOs. I would watch out for recent IPOs. I separate those on all my patterns. I separate recent IPOs when they don't have a trading history, when it's just a recent IPO stock. I've seen them just do nasty, nasty moves, and that is a red flag for me. And unless there's resistance, guys, I think Chris has already been talking about in this chat. Resistance is good. Resistance is always the best for all of these. Resistance are short sellers' best friends. So resistance is really key on a lot of these plays. Yeah, like AGRI or Grom. I'm sure everyone remembers Grom. That was a recent IPO. Yeah, there's a lot. Watch out for recent IPOs. Just track them. See what you find. You got to be self-sufficient. Let's see what other questions we got. How is your trade? Feel dangerous to short a gap. Don't have guts to short it. I feel dangerous to short a gap. I don't have guts to short it. Does KVS Room advise how to minimum the risk to short? The KVS system will provide a profitable strategy for gappers. You got my word for it. I've seen them. Hey, just if you don't believe me, just go in and see the criteria and track it yourself. You can't just walk in there and just, sure, you could walk in there and just follow it. And, I don't think you're going to find so much success in just doing the following game of his system alerts that he has in there. Every now and then, yeah, you'll probably make money. It will work. I think you can do it. But for long run efficiency, you got to learn it. You got to study it. But yeah, you could check out his gappers, and they are successful. The data is clear, and you should check it. More and more people getting turned to the use of, with more and more people getting turned on to the use of data and using the same data and mechanical approach, what is your opinion on the potential deterioration of the edge? That's a very good question. He's basically asking, do I think this edge can disappear as, maybe more crowded it gets? That was a big worry for me as well. Another reason why I was like, oh man, I can't believe Chris is handing all this out. It's going to get crowded. It's going to get this, it's going to get that. But I've actually talked to him, and it's a debatable topic. However, I am on the side that the edge will not deteriorate. These products are patterns of human nature. And as long as human nature is always going to be there, and human nature doesn't change, it's always going to be there. Therefore, these patterns are always going to be there. That, and there might be some fluctuations in them, but if you track data, you will catch it. You can adapt. You always have to adapt. So I'm not worried about, this edge disappearing anymore. And not to mention, it's such a tough strategy to begin with. Most people that actually try this strategy can't end up doing it. There's like such an emotional component to the strategy that mentally it just kind of goes against human nature sometimes, if you will. And that is and so many people end up failing, which leads me to my another point. Yeah, the information you'll be learning, it's so useful. But everyone has their own trading personality. What works for me in my system might not work for you. And that's just a fact. Every trader has their own style, and what works for them works for them. What works for you works for you. However, learning this stuff is incredibly important. Even though it might not work for you, you'll still learn so much from it. And hey, if it doesn't work for you, there's other ways to trade out there that you can go learn from, and go do that. But for me, this system set of rules, having a statistical edge and mathematical just probabilities going on, and being able to see on paper what it is that should happen and will happen according to the numbers, that is something that makes sense to me. That is something that is important to me. And that's the way I do it. And I'm not worried about the edge disappearing anymore. That's something I used to be worried about. And no, don't worry about it. So many people, so tough to do this system is what I'm starting to learn. Let's see. Yeah, rules and system make life a lot easier. Again, everyone is different. So if it doesn't work for you, hey, it's not your style. It's not in your personality to trade like this. But the information you're learning is just incredible and so necessary. I don't know how. Of course, it's coming from me. How are people trading without statistical edges? It just, that just doesn't make sense to me. You gotta have it. However, it doesn't mean you need to. A lot of people don't track data and they still find profitability. You can do that. But yeah, I think data is key. That is my opinion. Do I short pre-market? Yeah, sometimes. Yeah, I'll shorten the pre-market. Sure. But I always have my one entry and my one exit. I'm not gonna tell you all my secrets right now, but yes, I do short pre-market sometimes. Yeah. What else we got? How big are your borrow costs in proportion to your gains? I don't know. My borrows probably take about, overall, it varies per trade, but I think maybe 10 to 20%, something like that. My borrows will factor into the overall profit. Like by the end of the year, I'll look at my profits, and then I'll see that my borrow costs take about 10 to 20, maybe around 15. Yeah, it's about right. Volume red flags for gappers. I actually do not have a volume red flag for gappers. No, not me. Do you short pre-market? But I've been looking at it, and it's just tough. I mean, I've noticed that for volume, some it might be a red flag, but at the end of the day, I mean, if I still just hit those ones with big volume, they still work out. I think more of a volume forecast, like what it's doing after 10 to 30 minutes of that market open. I'm trying to factor that into my gappers to maybe see if volume forecast is X at this time, odds may be best to get out right then and there. I'm working on that. I just don't have it completely finished yet. Okay, I think any more questions? I think there's one more guy typing. How would you advise someone to start tracking your own data? It seems like such a big undertaking. Great question. And that's something that the KVS room is might be the only room out there. Sure, other rooms will teach you how they track data, but they're not truly, I don't think they go into the Excel sheet as sufficiently and thoroughly as Chris does. Which is so, like, if you don't know how to work Excel, this is one of the rooms that actually would teach you how to use an Excel. So that's how I advise you to start tracking your own data. Learn how to use Excel. Learn what you need to plug in. Chris talks about it in all of his webinars. And it's a really good community that really goes into specifically concentration on tracking. And you can have no history of it, and you can learn how to do it. Yeah, not really a guru shows a spreadsheet like Chris does. That is true. I mean, I told you again, guys, the value he's giving out to you guys, all the work I know it takes to create this data, and the fact that he throws it out for $200 a month is really fortunate for you guys. That's all I got to say about that. I learned a lot of different strategies, and this is the strategy that I ended up coming out as well, the statistical strategy. So the fact that he's just throwing it at you, there's no reason you can't find success. Especially now with all the tools and resources out there, you guys just put your all into this. You'd be shocked at what can end up, how your life can change. You'd really be shocked. But you got to put your all in it. Yeah, I know how to use Excel, of course. You don't know how to use it. Yeah, I mean, hey, Chris's room teaches you how to use an Excel. If you don't know how to use Excel, it's, I'd say, mandatory for system trading, unless you want to be like me, who also didn't know how to use Excel and would do everything on paper, tick by tick. Just most it's a lot of hours I put in that tracking data on paper. Jeez. So no, you can learn Excel in this room. And you need to learn Excel. Yeah. Using your own volume forecast model. No, I actually don't use my own volume forecast model. I have as you get into, get better and better at trading, you start to branch out more. You start to, your community of traders, you start to talk and, branch out in your community of other successful traders, and they'll help you. I'm actually a buddy. I guess we're friends. This a trader I haven't met yet, but we've been talking a lot. We always talk shop. He actually created his own volume forecast method. And I see that there's a lot of value in there as I'm starting to look at it. And I want to start incorporating that into my gapper strategy. So no, I did not come with my own. I do not know how to code. But as you start to make connections in the trading world, you might make a friend that, you can start sharing tips and strategies with. And that's what Chris Verma's room is. That's how I treat it. I joined this room, and now I have another fresh set of eyes to look at all the same data that I'm looking at. And if I miss something, maybe he caught it. So it's really useful in that sense. No, I don't use stocks to trade. Question asked me if I use stocks to trade. I do not. Oh, wait. Oh, scripts to trade. Sorry. Scripts to trade. Yeah. No, I do not. I have a friend that I made in the trading community. I use his Well, I haven't used it yet. I mean, I've tracked so much patterns that, and I'm always doing so much work that doing another pattern is just another add-on of work. So I've been very occupied and I have not used his volume forecast method yet, but I have it and I do plan to use it because I do see, I've checked it and he showed it to me and it can be very accurate. So I know Scripts to Trade has all day faders volume forecast, and I mean, everyone knows about all day faders. I mean, I would trust that volume forecast as well. I know my hypothesis is using a volume forecast and putting that with your gapper data, you can maybe weed out some crazy squeezes. And I increase your probabilities of not getting hit by big squeezes with a volume forecast. You just have to get data on it. You have to have data back tested on it. And so that's what I need to do before it becomes a conclusion and before I act upon it. Yes, trading is my full-time job. That's the thing. I mean, yeah, trading, it offers a lot of freedom, guys. You can be wherever you want, do whatever you want. You don't even have to work that day if you don't want, if there's no trades. However, what ends up happening and you start to find success is you get really obsessed with it. I mean, it's your passion. You love what you do. So yeah, I have all this freedom, but well, I mean, that's the thing. It doesn't really feel like it just because I've worked so much now. Like now I work longer hours than even my buddies at their jobs. I'm in my garage until like, 7, 8 at night from like 5 in the morning, just because I love increasing my edge. I love doing this. So I choose to do this. So it is freedom since I'm choosing to do it. And I love to do it. But what ends up happening is you start to love it so much, you just do work more and more at it. So I got to remember to, I did this to have freedom. So, go on vacation, go trade on the beach for the week if you want. I got, I'll start doing more of that. But I love what I do. So I work here. I'm in my garage quite a bit of time. Let's see. What is the minimum percentage that a stock has to gap before you take a look at it? For me, 40%. I'll sometimes look at 30%ers, but I'll use smaller size for 30%ers. For me, the answer is 40%. I need that stock gapping at least 40% on the day. If you want to get a more look of just what gappers are in general, the gap up short, people call it the gap and crap. I actually have a video on my YouTube channel. Just goes over the basics of the gap up short, gap and crap pattern. So just go take a look at that. If you don't know what the gap up short is, the gap and crap. Let's see, we got any more questions? Did I miss any? We tend to use wider or narrow stops. Turn on to use the data. Okay, I think yeah, thank you. Okay, I think there's one more person typing, a couple more questions. Okay, I think that's gonna wrap it up, guys. I'm supposed to do this for an hour. It's 11:03. Probably gonna head out. Thank you, Chris, for having me. I enjoyed doing this. I hope you guys got something out of this. Thank you for being here, and I'll see you in the room. I'll catch you guys later. Let me just